Hey, good morning, everybody. Let's crush the market today. What happened yesterday in the market? Well, the SPY went up about 0.77%, rejected 385, almost 386. 380 was support on the low end. Why do I talk about support and rejection? Because you have to know when to enter trades and exit trades. Okay, let's talk about what trades I had going into yesterday. I had some SPY calls that I jumped in at 379. I exited out at 385. I made 70%. My SPY trade went out till Friday to be safe. I sold on Wednesday, but buying myself 2 extra days means I didn't have to stress about that. I was in some Disney calls. When did I sell? $2.50 to $3. Remember my strategy from yesterday morning? I said I was going to try and get $4 to $7 on those Disney calls. The same ones that I mentioned entry at $55, $65 that went up to $1.04 the first day. Okay. They went up to $4.81. So, yes, I did a poor job of execution. I did an awesome job of leading and an awesome job of strategy. Just poor execution. I said Disney was going to go to 92. Disney went to 92. That was my selling point. I sold too early. Okay, so SPY calls, Disney calls. What happens? I was looking at Netflix puts yesterday, but did not jump in. Why? It's hard to fight momentum and the trend in the market. What did I jump in? Something very similar. Starbucks puts. Now, when I look at Starbucks for the past couple of days, let's just bring up Starbucks 1 month chart. I mean, here's what the chart looks like. It's going off the hook higher. 1, 2, 3, 4, 7, 8, 7 out of 9 days higher. It broke its moving average. It's above where it was the beginning of December. So why the hell am I in Starbucks puts? Okay, the algorithms just flipped on me. But before the algorithms flipped on me, the algorithms were telling me Starbucks price should be closer to $101. Not like the market was going to throw up on itself. Not like Starbucks going bankrupt or some shit like that. Now, the good news is Jim Cramer said he liked Starbucks yesterday right before the close of the market. So I'm like, okay, let me hold my Starbucks puts a little longer and see if we can make some money. Thank you, Jim Cramer, because you're just horrible. Okay, so what happened yesterday? We had PMI, which are manufacturing numbers. Those came out pre-market. They came out at 48.4. The estimate was 48.5. What does that mean? Well, under 50 means we're headed to recession, okay? Means that manufacturing numbers are down, okay? Next, we also missed by 0.1%. So what does that mean for the market? Again, that is bearish sentiment. However, we were looking for some type of bounce. I mentioned that before, that I could see the first quarter bounce of 10, 11, 12% higher. Now, does that mean that I think the market is going to just go up continuously? No, we're still in a bear market. We're just in a little bullish run. That run was pretty exacerbated yesterday. Now, what did I think could happen yesterday? I thought we could see some short covering. The market's been continuously beat up. I'm looking for a flip. I see stocks like Disney and some other stocks, which I sold yesterday because I didn't trust the market. Remember, I was in Disney, FedEx, Nike, Lee Automotive. I sold all of them. I made like 8% in like 2.5 days. For stocks, it's a no-brainer. Nothing goes straight up. Nothing goes straight down. So again, I had to sell my positions. Could they go higher just to stock holdings? Sure, they could. But I'm more focused on trading options. I'm more focused on market direction. Now, if we were to focus on trading, who would focus on trading? Romeo, who's doing a live stream at 9:15 a.m. We should have a link to Discord below if you want to join. Romeo was on fire yesterday. I think he gave out 6 trades, compiling 129%. My last few trades, remember, 1 contract at a time. That was what I was going to do with my new account, right? $270. I'm north of $800. So that's about 250% return. Now, again, if I held my Disney longer, I would have been up 400 to 500% in a week. But again, I don't mind securing profit. I don't mind saying to myself, you know what, you were right. You just had poor execution. Again, I was so beat up on myself on Disney yesterday. I'm like, why am I on holding? I just can't believe I sold and took profit. But the good thing is you had the right trade, the right execution. So let's talk about what's expected today, because I just saw pre-market turned, and it turned pretty hard. Am I surprised? Not really. And I'm going to show you why not. I'm going to go to Discord. I'm going to go to what I do every day after the market closes or pre-market. So I've got to go back and scroll and find the ones that I was looking at. I mean, so many people are looking at different algorithms and flows. But I want to show you guys what I was doing yesterday. Okay, so it was yesterday, 5 o'clock. Yeah, we're getting around my time. Okay, so 5 o'clock. I probably looked. Oh, here we go. Starbucks, bum, 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 bum. Okay, there's the market. Okay, so we're looking at Netflix, which has been ripping. Now, again, this didn't interest me until I saw this person looking at the Netflix chart. Let me just make sure you guys can see it. Okay, now what do you see on Netflix? Okay, so they type in flow sum, which tells you the number of outstanding options, calls and puts. So we go open interest. Okay, well, there are more puts than calls, and lately puts are being in demand here. Volume, again, more puts than calls. Premium, holy shit, what a surprise. They're paying more for the puts on that. So what does that tell me about Netflix? Likelihood that it was pumping and that it's probably going to go down. Where is it at? It was high as 311 yesterday. If you look at the dark pool numbers, 311 was a key number on the dark pool. If you wait till 311, buy your puts, and you look at Netflix, closed at 309. It's probably what, 307 pre-market? 307. And again, if today is not a banner day and it gives back some of its, oh, here we go, dark pool orders for Netflix. Something else you can look at. Okay, where are they buying it? 307, 305, 306. So yes, I think it's going down somewhere between 305 and 299. So yeah, I can see Netflix giving back about 2% today. Let's look at the net flow of the market. Again, this is what got me thinking. I'm a bear heading into tomorrow, being today, Thursday. Why? Okay, costs for your puts still going up at an upward pace, still bearish for the market. Price, which is in white, finally spiked. Where's it likely to go? Back down somewhere. Cost for calls going up. So I'm going to be watching this. I expect cost calls go down here. I expect the price of the SPY to go down, the market to go down a little. Then I looked at Starbucks and I was like, okay, Starbucks, I'm bearish Starbucks. Starbucks is going up. And then I'm like, oh shit, open interest. I might be on the wrong side of the trade. But again, Jim Cramer told me he likes it. Now, until yesterday, Starbucks was extremely bearish. Costs for puts were up here. Price was up here, meaning price should go down. But yesterday, they started buying the calls. So that makes me more weary, which makes me want to say, I will secure profit and get out on my Starbucks puts. Why? Again, the algo's finally shot up, which says, okay, the price could go higher. So I'm going to look for an exit strategy. Now, somebody's looking at Snap. This looks extremely bullish. However, I mentioned Snap a couple of days ago. I would be wary of that. There seems to be manipulation. Let's look at the market as a whole. Market as a whole. Open interest, puts versus calls. Well, shoot, you're over 2.5 to 1. Now, yes, this totally could be people hedging their bet, meaning big money buying puts because they own ETFs, they own stock, they own everything like that. And they're saying, okay, if the market does take a tumble tomorrow or gives back some of its gains, let's secure our profit. Let's hedge our bets. Okay, so that is probably what we're seeing. Also, what we could be seeing is going into the end of last year, there was no short covering. Why? Because so many stocks were beat up. As we're exiting the year, so many stocks were beat up. So I said to myself, if I was big money and if I was going to cover my short positions on all those piece of shit companies that went down, like not Lucid's a piece of shit, but it went from $28 to $6. Affirm went from like $300 to $6, or Upstart $300 to $6. I mean, there are so many companies. Carvana, right? Carvana was like in the $4 range. So what does that tell me? It tells me there could definitely be short covering. Jelson, I see you asking a question about a specific stock. It's okay. Ask the questions on the side. Mention whatever stock. I will tell you what my feelings are. I'll tell you if I hold any position or anything to that extent. That's what we want to do. So what else do I like to do? I also like to look at, the top flows to see what's going on. So let me just see. I made a posting yesterday about the top flows. Let me just see if I saved it. All right. So top flows, I would share this, but what you can see is I'm going to load up the SPY chart instead. But SPX top flow. Other than that, on the negative side, you have the Qs, SPY, Microsoft, Costco, the Russell, Netflix, Google, Adobe. On the bullish side, it's just so small. So small. So what did that tell me going in today? Going in today, I said to myself, I'm going to be a bear. I'm going to be a bear. Yesterday, I was a bull. Shit, I hate flip-flopping like this. But again, I like to follow the market in market direction. Last thing I want to do is say market should go higher, and I think it actually is going down. So I thought yesterday, bullish, correct on that one. Today, exiting yesterday, I'm like bearish. However, things are popping after hours. Everything was even greener after hours. And I'm like, holy shit. The one position I decided to hold overnight, I'm holding those Starbucks puts, and Starbucks was popping. So I got to be more careful on Starbucks again. I'm going to give it and let it play out. You got the SPY off 0.5. So the SPY is sitting at 381.92. Why is that important? Okay. Let me share my screen with you guys and show you what we're looking at as far as the SPY goes. So let me just get back to StreamYard. Getting much better at this. Add it to the stream. Boom. There you go. Okay. So what do we see yesterday? And I'll just read you some numbers yesterday. 385.88 was the top of the SPY. 380 was the bottom of the SPY. Where do I think we're going to revisit today? No brainer. I do believe we'll see at least 380. So I come up with my dark pool levels. Key dark pool level for the SPY, $380.50. Where are we sitting pre-market? Still above that, closer to 382. So we're right here pre-market, which means there was definitely some buying late in the day. So I'm not just going to blow it off and say, okay, it doesn't make sense. What I'm going to say is we tended to top out at 383, almost 384 right here. So if I'm going to look for rejection on the SPY today, first number I'm going to write down for my strategy is SPY puts at 384.30. And I've mentioned that number for a number of days. And again, I just mentioned 384, but 384.30 was supply zone. We broke through it yesterday. I mentioned I was a little surprised. We spiked up. I did mention it was extremely light volume, especially for the beginning of the year, light volume. So again, SPY puts 384.30. Downside, okay? Let's say we go down. Next level down, I'm looking for its rejection is 383. Then what we saw yesterday is 380, which was yesterday's low. So I'm saying to myself, if I'm going to be a bear today, I want to see the market break 380 to the downside. That will confirm it for me. So next number down is 377. So I'm saying if we break 380, and again, it's plus or minus 20, 40 cents. So if I see 379.37 at some point, what would I look to see? Okay, so let's say we go to 379.37. At some point, we see 379.37. Am I going to buy puts right there? No, I'm going to let the market rebound a little. And when it rebounds and I say, okay, we hit this level, I definitely think we're going to see 377 and change today. So I'm going to say, okay, I'm going to wait for a little spike in the SPY to enter puts. You never just say, okay, I think the market's going down, I'm going to buy puts right now, because you're looking for best entry. You're looking to be profitable. If you just went off spur of the moment, you'd be trading off emotion. Doing anything emotionally that involves money is a bad idea. Making a business decision when you're emotional, bad idea. Trading when you're emotional. And I used to bring this up, fighting with your wife or your significant other, or something with your kids, or running errands, or heading to the doctor. Don't trade. If you've got stress or some other influence on your life that will make you an emotional trader, then you should not be trading. Trading is coming up with a full strategy and executing. Yesterday, I had some shit going on. So I was like, man, I don't know if I want to hold this position all day. Again, it was interesting because I held my SPY calls, but the Disney calls, which were doing good, I was like, okay, let me just exit out of those. So again, sometimes you can mix yourself up. What else was coming out today? Okay, let me just get to that. Today's information. Interesting. Okay, we had unemployment report at 8:15, jobless claims at 8:30, S&P PMI numbers, final numbers for December, 9:45. So I'm going to look for a little bit of, see what the market does right at 9:45. If I'm correct, we should see a little bit of a drop, probably like 25 or 50 basis points. Percent. And then you've got James Bullard, St. Louis Fed, speaking at 1:10 p.m. Again, Fed notes came out yesterday at 2 p.m. Volume was light in the SPY. Then you saw volume pick up, and we dropped from 383 to 381. Again, volume was a little stronger at the end of the day, but still light as a whole. I believe we had short covering. So I guess I'm a little bearish going to today. Let's see what kind of questions you guys have. And then we're going to head over to Discord. Why are we going to Discord? Because Romeo is doing a live stream today. again at 9:15. Oh, and anybody watching on YouTube, please hit subscribe. Why? And push notification. I believe Love is doing her first talk show today. So people that are struggling, understand Love took in a small account and grew it north of 50,000. Romeo, who's a member and a partner in the platform, was $3,500 down to $84 2 years ago in the summer. Newer member at the time took $84, grew it north of 50 something thousand dollars. So anything is possible. I showed you guys a video the other day. One of our members, Johnny, was down to $3, was up to $680 yesterday. From December 23rd, he had $3.49 left. And now he's up north of $680. So yes, his $3 are probably 3 contracts worth like $1 each. And he probably got, more than $1 exiting out and then entered a new trade and then followed me into Disney and then entered a new trade and finally sold and took profit. He left money on the table. Imagine $3 into like $1,200, but $3 into $680. Good. Okay. PDD. So I mentioned Chinese stocks, I think 3 days ago. So now that China is up 3.5%, 2.5%, and 1.5%, 7.5%. Would I suggest Chinese stocks right now today? Heck no. I sold my LI, my Lee Automotive, yesterday when it was popping 8.5% higher. So PDD, man, if you're in calls, which you can't be in anything else right now, I would say secure profit. If you're like, okay, well, if they're not going higher, they must be going down. No, China's market is manipulated. Chinese government does great things to manipulate the Chinese economy. So as long as China is still bullish, you can either be bullish on PDD and other Chinese stocks, Baidu, Alibaba, even like NEO. I'm sure NEO was popping, even though I stay the hell away from NEO. Again, I was in Lee Automotive. That would be the Chinese company that I chose to be in. Why? The charts were telling me, the volume was telling me. However, I sold, took profit. All right, so PDD, I would be cautious on that one. Again, Chinese companies, let's see where actually PDD is right now. It's probably in the 70s, right? Oh my God, it's in the 90s. Yeah, I mean, this stock could easily have a great pullback to like, $83. It's just been ripping. It's been ripping since earnings. Fair value, I mean, it could go down by 15% if China gets hurt. Again, China's been extremely strong. I don't trust China, so I stay away from China. Okay, here's a great question because there was a little bit of back and forth on our Discord about this. Thoughts on Amazon? Amazon spiked 1.6% after hours after they announced they were laying off 17,000 workers. Understand, Amazon has clear over, I think, 1.5 million workers. I thought a more righteous thing to do, because 17,000 workers, yes, it's going to hurt 17,000 families, but that's not really going to cause that big of impact in Amazon. I was expecting something like 65,000 layoff, 50,000 worker layoff. So let's see what Amazon's doing today, this morning. God, I wish I had something to drink. Okay, it's up a little bit. What do I think? I mean, I'm looking at the 5-day chart. It looks like it definitely could bounce higher. But again, if I'm zooming out on this one, I could see Amazon retesting, $80 again. Maybe at $80 or $79, I would get, interested in Amazon. But I wouldn't be interested in Amazon. I get it why these stocks pop. They're like, hey, we're firing people. Stock pops because they're cutting costs. They're being more efficient. But really, to me, that's a sign that a company has to do things like that, and Amazon shouldn't need to do something like that and follow suit. There are other companies that need to. Okay, thoughts on Apple? Sure, I'll give my thoughts on Apple as well. Apple, again, I would look at the dark pool levels of Apple. I can't bring up Discord right now, but you're more than happy to join our Discord. You would type in TR-DP levels, and then you would type in Apple, AAPL, and you look at dark pool levels. But what I can remember on Apple is it had support at 125. Not a shock that yesterday's low was 125.08. It also rejects 130, and I don't even think we're going to get that high today. Again, there's been outflow for 2 straight days. We saw, and I showed you, top flows for the QQQ still remain bearish. So if I'm going to be a bear, which I am right now, and I'm saying top flow QQQ, market's going down, we're going to see 379, 1% down on the SPY. I'm going to tell you that Apple's probably going to drop a little over 1% today. So I would see Apple battling the 125s again. If Apple turns bullish, you could see it spike up to 129. But again, the whole market would have to be extremely bullish today. it's a possibility. We have CPI numbers coming out next week. Nothing's really saying so much as far as the market go. The only thing you have to go on are the Fed notes from yesterday, and the Fed notes on the Fed minutes were shit. We're still going to be aggressive in the market. We haven't done everything we're going to do. And the market responded with, hey, we thought the Fed might lower rates in the second half of 2023, like quarter 3, quarter 4. Now it's being pushed back quarter 4, quarter 1. So yeah, I could see some downward stuff on the market. Let's see what else we got. Good morning. Yeah, EEM. What is that? Energy? I don't even know EEM. I'm sorry. I don't know every stock. I don't know every ETF. Emerging markets. Okay, I mean, emerging markets going to be more of a spec play. If we're going into a worldwide recession, I wouldn't want to be in emerging markets. I would rather be, and you might want to focus on the Russell. The Russell are smaller cap tech stocks. I know Romeo and Love were shooting the shit about the Russell yesterday. I don't know if it was bullish or bearish, so you'd have to go in like the high risk or the high roller room, but I'm thinking you're in there. Romeo made a comment about he saw a trading ticks alert for the Russell go off. Love said, okay, I'll take a chance. I don't remember the position because I wasn't involved, but I don't really like emerging markets right now. I think the world has issues going on. I'd rather be U.S. focused, especially if you're looking for something type of bullish momentum. I wouldn't look to third world countries and emerging markets for bullish momentum. I don't believe China, so I think China's going to struggle. I think third world countries will struggle, and I think it's going to be like a wave, and the U.S. hasn't seen the worst yet. Yeah, we could be in a bullish cycle in a bear trend, but a bear market's going to last 9 to 11 to 14 to about 18 months. So we can go almost like a year and a half. Saying the bear market started January 3rd or 4th. We were at the high last year, right? That was the market high, January 4th last year. So let's go out. We're only 12 months into a bear cycle. It's probably going to last another 6 to 7 months. So if you're looking for the market to explode, not necessarily. I actually thought first quarter we could go up in the market. But again, every spike I see in the market, I will be buying puts. When it goes down, I'll be selling them and securing profit. That's what I see right now. Heading over to Discord. Romeo was on fire yesterday. Don't want to miss that. Love is doing her first live stream talk show this afternoon. I'm not going to miss that one either. Please make sure you subscribe. Hit the like button. YouTube will show us out. And if you're part of Discord, I'll have your morning video going up with very specific SPY levels. Okay, I'm looking at 3 specific numbers in the SPY. And we know SPY lately, when we break one of the numbers, we see the next level higher. When we break below, even though I didn't think we were going to see it the other day, I said 377 possibility. What do we see? 377. So I'm going to lay out the 3 possibilities, my specific 1 or 2 strategies, and then go forward from there. I'm going to join Romeo. Listen there. I love hearing him and love speak talk about it. And I'll see you guys later before I lose my voice. Have a great one.